morning, it's Jeffrey Cohen. It is Friday, June 10th. Good morning, Jeffrey Cohen, Friday, June 10th. Want you to see what's going on in the market today. So it's June 10th. Good morning. Are you nervous today? We're a little nervous. We're wearing our Superman shirt because we think today is going to be a rather interesting day. So just to show you, we're looking at the QQQ down 1.37% pre-market. We're looking at the Spider down 1.13% pre-market. We're looking at the Russell 2000, which I don't think trades very often. So, oh yeah, there it is, down 1%. And we're looking at the VIX, which is a volatility index. And that's up to 2740. So we wrote a Good Morning Are You Nervous blog. And it's changing now because the markets are actually weaker pre-market than we thought. And so, but it's okay. Just the feeling that we had was, we're in for a rough ride today. And let's talk a little bit about it. I got lots of pictures to share and I got lots of data, but at the end of the day, we run our model, right? And I can walk you through some of that stuff, but we're seeing increased volatility. We're seeing some issues. It's fine, right? But walk you through the big things. Yesterday, we really wanted to short a whole bunch of stocks. And so we found good ones like RGC and VIEW. And a lot of these stocks have zero borrow. So what that means, if you go to shortables, we'll just take a look for Corbis, which is one of our long-term holdings. God, what a garbage stock. See, this has 1.4 million shares available to be shorted. It doesn't cost very much either. It costs like 0.5% a year. So my guess is lots of people like to short Corbis. It has no revenue. It's a clinical stage biotech. But let's take a look at RGC. Regan Cell Bioscience Holdings, zero borrow, and it's had zero borrow for quite a while now. So zero, and if you can borrow shares, it costs you 126% to borrow it. So that's a lot. Hang on, the cat is scratching at the door. Be right back. Come on, Pumpkin, you gotta get in. We're gonna do a cat cameo. It's time for cat cameo. This is Pumpkin Spice. He goes outside every morning, keeps the yard free of pests, and of course he likes to come in right in the middle of the video. So the reason why you can't short some of this stuff is there are people that are just out there working the market. So there's stocks like Indo, which is Indonesian Energy, I think it's called. We found it as 17. We knew it was shortable at 17. It's down to like 10 now. They started our descent earlier. The problem that we have, so we run the model, we run a down run, you get a lot of stocks that you should be shorting or avoiding, right? A lot of them. A lot of stocks. So in terms of dog stocks, there's like 1,500 money losers out there, and we do a full analysis of them, right? And so question for you is, like, if you have capital to deploy, because we have limited capital and we've sidelined, I want to say 80-90% of all of our capital, it's sitting idle, right? Because we're in a market downturn. So that's why we offer the services to clients, because we want you guys to take advantage of the stocks that we find. So market fell into the close. Why did it do that? Right? So the market started pretty green. They were actually okay. Stocks went up, stocks went down. We made money yesterday in the markets. The pundits would say that it was inflation concerns, but I don't believe that. We've had inflation for over a year now. And the losses were pretty widespread. So I've got some pictures to share with you. This is from FinViz. How red that is. So NXPI is green, but that's because it's being acquired. Costco, Dollar General. I think Costco did okay because they don't have the same inventory concerns. So what's been happening is retailers have been stocking up on inventory, which is great. I mean, you don't see a problem like that with Starbucks because I don't know about you, but the Starbucks near us, there's a 18-wheeler that pulls up every night before close, restocks the store for the next day. And so I'm assuming Starbucks is pretty effective in managing their inventory levels. And maybe Home Depot is also having a similar, and Lowe's. Maybe houses are a little more expensive. People are going to spend more at the home improvement store instead of buying a new store. But in general, this entire market's down. See, that's not normal. It's not normal that every single... This is full, right? This is like probably 2,000-3,000 stocks. It's not normal that 2,000 or 3,000 stocks would all decide to have a bad day on the same day. So there were some large overriding bets. Now, if we look at just the S&P 500, it's just as red. What's interesting is you could say if it was the S&P 500 and not the overall market, that it was derivatives. But I don't even think that's the case. This is a large-scale sell-off yesterday for the last half of the day. By the way, it takes a lot of money to push every stock down. Let's look globally. Is it just the U.S.? No. Look at this. Look at the market yesterday. The whole world is red. So what happened? I don't know what happened. Nobody knows what happened. It just went down. I do know that the dollar decided to strengthen against the euro. Okay. That's interesting. What else do I know? I know the markets fell into the close, and I know that some of the breadth indicators that we look at got really negative. Negative like when the market was correcting and we did the video market crash, right? Advancers, decliners, right? 16% advancers, 80% decliners. New highs, new lows. Now, if it's just a one-day fall, that's fine. 35 new highs, 238 new lows. I mean, today, if we have a bad day and we start to see like 500 new lows, right, then we know things are in trouble. You still have a fairly healthy market in terms of the 50-day moving average, with 28% above, 72% below. And this I find interesting. Into the close, bear. 75% bearish, it looks like. I don't know where they're getting those metrics from, but interesting. And I want to thank FinViz for making this data available. I love their visualizations. They do a terrific job. Notice something else. We have taken a real shine to fixed income lately. We really look at it. We really focus on it. It's important in the stocks that we buy or short. It's important in the market. See, because a company has to pay off the bondholders before the stockholders get anything if there's trouble, right? And so we notice that bonds are holding on quite nicely. So we have little sticky notes that we keep. And this says, beware the bond yields are at 137.53 to 137.09. Support level 135. So we're at 137.31. We're no different all week. The yen, you're going to see that the yen is trading in a range too. So yields are fine. Yields are moving. Now on the corporate fixed income side, hold on to your hat. Let's see what the market's doing. Just a real quick peeky boo. The Russell's still down. Pumpkin spice. I'm on a video. Come on. You just went outside. You don't need to go outside again. The S&P 500 is down 1.5%. See what I got to deal with every morning? Mr. Spice, we call him, pumpkin, because he's, orange. The QQQ pumpkin's down almost 2% pre-market. God, I wish I would have been short all those stocks that I wanted to short at the end of the day yesterday, but I didn't short anything. I'm not short anything right now. I want the market to go up. I'm an optimist. I'm Superman, right? I want things to do well. Unless you're Red Sky, right? Or Red Sun Superman, and then you're a totally different story. We saw that movie. It was a good movie. So here, back to it. So what's corporate fixed income doing? So yesterday was very interesting. So, you look investment grade. I don't know about this high yield stuff, right? That sounds risky to me. High yield is like 2-to-1. Advancers, decliners was 1 to 2, roughly speaking. Maybe 2.2, right? Highs to lows, 10-to-1. Kind of makes sense. If you got high yield, it's hard to get out of high yield without an economic expansion, but it's easy to fall deeper and deeper into debt and despair. We hit a recession, those bonds are not going to pay. Now on investment grade, it's like 3.5 to 1 decliners to advancers. And this is what kind of freaks me out. Look at that number right there. 52-week highs to lows. You're at 100 to 1. 100 to 1. New lows versus new highs on investment grade paper. I know, Pumpkin. I'm totally freaked out by that. That means if you had 100 bonds in your portfolio, and they were all at new highs and new lows, 99 would have made new lows. That's really bad, okay? That sucks. I'm so sorry to use a bad word there, but it does, right? So where does that leave us today in pre-market? I don't think the market knew what it was going to do. 2 hours. We were up early this morning. I woke up before the alarm. I'm nervous about this market, right? So the first thing I noticed was U.S. equity futures were flat. They weren't moving. So what's happening is people got up this morning and decided to, they got their coffee and they took a dump all over the market. You know what that makes me worried about. I'm going to write it down. You call me afterwards. We're going to talk about what it makes me worry about. And it's not the long bond crashing either. That's a whole different issue. You call me about long bond crashing and the implications on the market, and we're going to have a really great conversation. So, Bitcoin's trading right at 30,000. It was almost a palindrome at 30,013 cents. Okay, so point is, it's a support and resistance level. This thing's range bound. It's not about crypto. Currencies were interesting this morning. The euro dollar at 105.73 means a stronger dollar. Where's it now? Pumpkin, where is the euro dollar right now? That's what I want to know. 105.29. 105.29 is not that interesting. I've seen it recently as low as 103.99. But it means a stronger dollar, right? Dollar yen at 133.95. It's the same level we've seen it recently, but this is like 20-year high at the U.S. dollar. Dollar won, 6.7 is a very strong U.S. dollar level, and it supports continued imports from China. These are two that we don't really talk about, but the United States has the 2 largest trading partners, which are Mexico and Canada, not China, not Japan, not Germany, but Mexico and Canada. And so where are we? So the Mexican peso, it takes 19.75 of them to equal $1. Recently strengthened in U.S. dollar, but it's down from earlier last year when the peso actually reached 22 pesos per dollar. So peso, it's interesting, is relatively stronger, right? That's probably why your fruits and vegetables are relatively more expensive that come from Mexico. Not a ton, but a little. We notice it in the grocery store. US dollar, Canadian dollar is 78.36. It's range bound between 77 and 80. You're right in the middle there, no problem. But what I find interesting, and I don't think this is a coincidence, and I tweeted this about the yen yesterday and got a bunch of likes. Both dollar yen and dollar won imply a free shipping offer from our large overseas trading partners. So I believe that they are managing their currency lower, weakening their own currency so that we can afford to pay the shipping costs. My guess is that when energy prices come back down to earth, when the logistics supply chain clears, you're going to see those currency pairs change. So we follow global physical mining stocks, and we like companies that produce steel in the United States, and some of them have, of course, global operations. These stocks fell out of bed yesterday. I mean, if they were Superman, they found kryptonite. Oh no, kryptonite, I'm in big trouble. Right? Let's take a look at some of those. And I love the steel companies. You know, I used to work in a steel mill for 9 months. I was a consultant trying to keep them in business. So I was doing like a corporate, like a help fix them up kind of thing. And so, here we go. Let's zoom right on in to the guys at the top of the charts here. So, you know, I don't like when Yahoo does that whole thing with the header and they make the header really big, but that's fine. Okay, so I'm so sorry. I went too big. Hang on. Start with how they did yesterday. Steel Dynamics down 6%. ArcelorMittal is down 6%. Nucor down 5%. U.S. Steel down 7%. Cleveland Cliffs down 8%. All at the lows of the day. All closed at the lows of the day, but they're not all for the lows in the 52-week. BHP, Rio Tinto, Vale, Newmont Mining, Freeport McMoran, HL and CDE, Core, just everything did bad yesterday. And so the question is, why would steel and mineral production be down? That's got to be an inflation or a recession pre-indicator. See, because someone like a Cleveland Cliffs has been just printing money, just gushing money, paying down debt, buying back stock. Cleveland Cliffs, I love to be Cleveland Cliffs 6 months ago, 3 months ago. The price of a ton of rolled steel must have come down. The demand from the automotive sector must have come down. You know, they bought AK Steel, and they actually do sell to the automotive sector as well as, you know, structural shapes and things like that. Should be good. So what must be happening is the price of steel must be coming down. Price of minerals, the demand for minerals. See, the demand falls before the price. So we see that, we get very nervous, we think that's bad. Now, trucking and transport was mixed yesterday and set to open mixed today. Strength in the trucking sector. So, okay, that says something nice. Other indices we followed, quantum computing was up, PCs and chips was mixed. Chips and semiconductors, which is normally a really good indicator of how the market's going to do, was up. Cannabis and tobacco were mixed, but leaning up. Retail, specialty retail was mixed and flat. There were no big moves. Money managers were mixed to down. High beta stocks were missed. So why do I care about high beta stocks, Jeff? So we do a little index on high beta stocks. And we do that now because it's just interesting. These are stocks with a beta of greater than 2.2. So if the S&P is going to drop 1.5%, these guys on average are going to drop 3 to 3.5%. Take a look at how they actually did yesterday. I mean, they wet the bed. 11% down, 10, 9, Did any go up? Oh, one of them went up. This is one we want to actually short. We think VIEW has been memed. It's being squeezed. Oh, yeah, baby. You can't borrow it. It's zero borrow. But this is a stock worth $555 million that has a going concern risk in their own 10Q. I don't know. That's a game. That's a short-term game. And I say that bubble's going to pop. But you take a look. So let's look pre-market. So, okay, so yesterday the high beta stocks dropped. Let's look pre-market. Jeffrey, maybe in pre-market we do better. Now, pre-market looks very red as well. Down 9%, 6, 5, 4, 3. Oh, American Virtual Cloud Technologies is up 0.5%, but all the others are down. So that tells me this is like Tiger Capital, right? You don't want to be in these. These are painful right now. And you're going to see some possible good deals. Like Party City. And we don't have positions in any of these stocks. We own 2 stocks right now. We're still in the S&P 500 index, passive index. But we own Corbus Pharmaceuticals and American Shared Hospital Services. And you might as well just hurt me. I hate those stocks. I own them. They're becoming long-term holdings now, over a year. God, do they hurt. But these are stocks that are like Coinbase Global, right? I mean, that's a real future kind of play. The Trade Desk. You get all those stupid advertisements to buy like women's clothes and vacations and whatever it is that you seem to like they want to sell you. That all goes through the Trade Desk. They do advertising stuff. It's great business. Now, NVIDIA is a tremendous risk-return trade-off. It's great, right? But it's down again. Now, that's tricky. I actually posted something I thought this was interesting. So, NVIDIA, like others, the S&P 500, top 10 holdings. Apple, Microsoft, Amazon, sure. Now, Facebook I find really odd because it's just a social media site. Google, I get it. Berkshire Hathaway, Tesla, NVIDIA. Every time somebody puts $1 of retirement money into the S&P 500 index, $100, then $1.37 gets invested in NVIDIA no matter what. The money manager may not even like it, but it just goes in, right? And then JP Morgan Chase. I find that interesting. So the S&P 500 right now is 8 tech, 2 financial services, 1 insurance, more like a holding company. So probably Berkshire Hathaway is invested in the S&P 500. So it's kind of like the S&P 500 buying the S&P 500. So then you have JP Morgan Chase. So it's 8 tech, 1 financial services, and 1 reinvestment back into the S&P 500. So it's a tech play, right? So when you look at how tech is doing, let's look right. You can't see it right now, but tech's tough right now. Look at how red tech is. It's the upper left corner. That's tough. That's a tough place to be. So the S&P is going to really suffer this morning, I think. Let's take a look at the futures. You got 18 minutes for the market opens. I don't know that we're going to trade today. This is a terrible market. We might see a crash today. VIX is up, although it's not high. The bond's holding up. I love to see that, by the way. Japanese yen has strengthened. The dollar's weakened. Look at that little bounce. It's at 75.15. So the yen at 75.15. That's not bad. That's coming back. Look at the euro. It's back up to 106 euro dollar. All right, silver's holding its own. Copper's holding its own. I mean, nothing's really changing here. Gasoline, though, continues its relentless climb higher. 427. It's expensive. Excuse me. I don't know. I think I got COVID again. I hate COVID. Sucks. Kills people. So, what do we want to talk about? So, I got a bunch of stuff here to show you, but I've really covered the main gist of it. So this is the VIX. The VIX is, it's historically in range at 26.64. Even at 27, it's fine. It just indicates more amplitude, more movement in the exchanges. So the only other thing to show you, maybe we'll just do a quick flyby. See, bond yields are moving. I keep thinking it's going to be yield driven. It's not. Now that's interesting. The 10-year is up like a bat out of hell. The 30-year yield is down. So when the 10-year note yield goes up, the price goes down. So I thought quantitative tightening would largely take place in the 10-year. But in fact, and reverse repo takes place in the 10-year. So 10-year is like the $100 bill. It's just used a lot, right? And so, or the 500 euro note. It's just so interesting, right? Rate goes up, price goes down. Let's see if I can see this here. We're at 107.72. It's going down. So it's interesting because bond goes down, rate goes up. So 10-year rates are going up. It's not necessarily a bad thing. What else are we going to talk about here? So we talked about VIEW being a memed. Can't borrow. We actually wanted to short this thing at 265 yesterday, and our broker couldn't do it. Party City, it's a bet on recession, not making it. Grow Generation. God, that stock is a heartbreak. Look at that thing. We're not in any of these stocks. I'm just pointing them out because these are your heartbreak stocks. Coinbase. Do you know Coinbase a year ago? Yeah, it was over $300. It's at $59.99. I feel like I'm like buying a TV at Target after they do the markdowns, right? Trade Desk. Again, it's a good kind of a new economy stock. It's $50. That thing was over 100. Our model loved and still loves Trade Desk, NVIDIA, stocks like that. High beta, low risk. And right now the problem is when the market drops, they're not risky. They just go down, right? NVIDIA, again, this is surprising because this is a good company with very solid fundamentals. And when you see NVIDIA starting to fall, plus with the S&P 500 demand, people must be liquidating S&P, which means a sell-off. And I don't mean just the price goes down, but actual liquidation, actually reducing the amount of money in the S&P 500. It's just so interesting. So we've covered all the content. It's 8:17. What might you like to see? You might like to see our model run and what it picked for today. And this is like self-flagellation because I have a feeling the Chicago Quantum net score up run is going to do so badly today. We do not manage client money, right? This is a model portfolio. To be honest, I've thought about it. I really have. I've thought about managing the money and hedging against S&P 500, but I'm just not exactly sure how to do it with the E-mini futures, and are they really liquid when you need them, and what happens when the market falls on a day like today? Will your hedges be there for you? And I just don't know that they're going to be there for you. I think the only perfect hedge can be found in a Japanese garden. Eugene Rothberg said that. He was the head of the bank, the World Bank, I think, when he said that. The only perfect hedge is found in a Japanese garden. So let's take a look. So the first thing to look at in our run, and this is like a giveaway. is that S&P variance is at 1.35, 1.36 times 10 to the negative 4. It's really not up. For all this talk of fluctuations, we're really more range bound than fluctuating. But the S&P 500 is down, excluding dividends, which were 1.32%. So the S&P 500 is down like 2.2% on the year after dividends. The Russell's down almost 20. The NASDAQ post-dividends is down about 10. So you lost 10% of your money in tech. What's funny is the spider is investing in QQQ stocks. So don't think you're going to hedge one against the other. Let's move it on down. There's a lot of guts in our model. Oh my God, all the solvers and searching. And do you know we build our own simulated annealer? And what's cool about it, the way you know that it works, is a simulated annealer when it's hot. I want you to think about in that steel mill. I'm standing next to an annealer. It's a huge thing that heats up the coils, right? And it changes the metallurgical properties because it aligns all of the molecules the same way. So in a in a solver, when you use a simulated annealer, you're basically saying, look everywhere. Look all over the search space. And every once in a while, jump anyway. Maybe it's better. Maybe it's better over there. Cleveland, New York, Chicago, LA, Miami. Go to Houston. Go to Minnesota. Go to some small friggin' town in Dubuque, Iowa, right? So it jumps like 161 times. 166 times. It's like out of 1,000, right? So it's jumping a lot. As the temperature cools, now you're jumping 74 times, 65 times. As the temperature cools further, now you're jumping 8 times, 4 times. So the way you would think about this is, so I'm looking for the best house that I want to buy. And at first I'm looking all over the country. Now I'm focused on not Highland Park, but North Shore, Chicago. And now I'm looking at like different houses in North Shore, Chicago. I'm not jumping anywhere. In fact, in some cases I jump 0. That means I'm just looking at every friggin' house in my town or in my city. And at the end, it's drilling down. And eventually it finds 1.4 times 10 to the negative 4. Our best solution is going to be 5.2. So our simulated annealer does well. It does better than the S&P 500. It finds a portfolio. Look at the size of that portfolio, though. So a bespoke simulated annealer that we code will find a large portfolio where you would invest equally. It's got trucking companies. It's got new tech. It's got Lovesac. It's got Lending Corporation. It's got semiconductors. It's got investment managers. It's got friggin' Gartner, right? It likes BlackRock. It likes semiconductors. It likes Amazon. Who knew? Adobe. It likes Broadcom. It likes the Carlyle Group. So what's interesting is you could just build a simulated annealer. Takes 10 minutes to run. And that's it. Wrap it up. Oh yeah, Jeff, thanks. But we don't do that. We spend hours poring over this crap. Genetic algorithms. You name it. So what did we pick? Jeffrey, what did you pick? I hate this. I gotta sort through everything and find everything, you know. Here it is. Your Chicago Quantum net score up run today is Dillard's, which we found out is very closely held by the family. Melly, NVIDIA, Silvergate Capital. They invest in Bitcoin companies. SI Time, which is a small company that makes the timing modules and chips. And TTD, Trade Desk. I bet you if we were to look at those stocks today, they would not be doing well this morning. Oh, and an AMD pops up. And so this gets you 5.2 times 10 to the negative 4, which is a nice little edge. It's a little edge. It's not a huge edge, but it's a little edge on the market. You take that edge, and it'll outperform the S&P 500 for you over time. It'll outperform your mother's portfolio or your high school kid's portfolio like crazy. But it'll outperform the S&P 500. This is a good portfolio right here. Problem is when the S&P goes down 1.6%, 1.83% pre-market, my guess is this portfolio will go down 5% today. I guess you could short the portfolio when the S&P looks down. Oh my God, look at that. The QQQ is down 2.23% pre-market. This is an ugly morning. I'm going to be going to the gym early today. But no, I'm going to probably end up just sitting and watching this damn thing. So there's your pick. And what's interesting about the model as we run it is you're talking about 6, 7, 8, 9 stocks, 10 stocks with rounding. So we really deepened it because we had we've been doing hypotheses on how to find the best portfolio the fastest way. So it's up to 13 stocks. So you can go from 6 to 13 stocks evenly held and still keep within rounding error 10 to the negative fourths of edge. But our model's finding much larger portfolios. Like the simulated bifurcator, which was a 1, you can go 23 stocks and get 3.7 times 10 to the negative 4 edge. So there are larger portfolios. So if you were a client and said, Jeff, I want you to build me a larger portfolio, and every day I want you to swap in and out the changes from your model, we could do that for you. We are opening up a custodial account with Charles Schwab. We'd be happy to manage money. Today we do not do that. You'd have to actually contact us. And then as we keep hinting at with 3 minutes to go, we do have a hypothesis on community banks, and I would love to share it with anyone who's interested. So have a great day today in the market. Good luck. Stay safe. Bye-bye now.